Welcome back to Higher Exchanges, the #1 independent cannabis investing show, where we break down complex cannabis markets into clear insights you can actually use. Here are your hosts, Jesse Redmond and Morgan Paxhia.
Welcome back. It's a very special show. It is Higher Exchanges, episode 100.
Bravo.
We will take just one moment to celebrate, folks. It's been a journey. We got here. Welcome back. I always appreciate you guys showing up. I think we know each other by now, but I am Jesse Redmond, Chief Strategy and Investor Relations Officer at Leaf Brands, and I am back today with two of the smartest cannabis investors we all know. First, he's the founder of the Cannabis Closing Bell with Poseidon. He was the master of spaces. Now he's a pro podcaster. Morgan Paxhia, my friend, what's going on, man?
Oh, here we are, episode 100, just days before we celebrate the big 250 for America.
I know, so, pumped.
Yeah, no, this is great. Glad it's amazing the timing, but here we are, and I'm feeling good. How are you?
I'm good, man. And let's make sure we welcome our guest so he's not just sitting here in the 2-box staring at everybody. We have the perfect episode 100 guest, Nick. I was so glad you're available. He's Cannabis Investments on X. He's Nick Gastevich in real life. And Nick, you are one of the people, quite sincerely, I've respected most in this space. You always have a level-headed take. You always do your research. So appreciate you taking an hour to spend some time with us today.
Jesse Morgan, thanks for having me. Congrats on 100 episodes. What a journey. And yeah, happy to be here.
What a journey indeed it has been. I think this is your 4th time back, Nick. I didn't do enough homework, but I think that might tie you for the lead. I feel like 4 or 5 is probably as much as anybody's been on the show. So always appreciate you taking the time, and so much to get into today. But Morgan, before we get started on the agenda, why don't you tell me about some of the best dispensary software out there?
Yeah, well, thanks as always to Flow Hub for sponsoring Higher Exchanges, and technology is changing fast. Am I still here?
You're going in and out of me there, my friend.
Can you guys? Oh shoot! Can you guys hear me?
Yeah, you're good now. Go ahead.
Oh man. All right, let's try this again. Technology is changing fast with the rise of AI. A year from now, there will be new tools, new ways to sell, and new ways to serve customers. The challenge for cannabis retailers isn't deciding what's best today. It's staying flexible enough to take advantage of what's next. That's why Flow Hub is open by design. Flow Hub gives retailers a complete platform to run and grow their business with the freedom to choose the tools that work best for them. Because retail is changing too fast to get locked into a lane of doing things. If you're interested in learning more, book a demo today at flowhub.com.
Awesome. Thank you very much. Flow Hub's been part of the evolution of the show. I feel like we've been through so many changes, both in terms of, the foundations of the team. We went from 3 of us to 2 of us. We started out doing spaces, sitting here wearing AirPods with no video. We manned up and got the video done. We made it over to YouTube, and the platform's been growing. So thank you for Flow Hub for putting some energy into us this year. That's been another nice evolution. And Morgan, I don't know if you ever read the comments, but if you read the comments on YouTube, most of them are kind. Most of the people like the show, but sometimes people get a little bit cranky because you and I like to BS off the top, and they'll say things like, it's been 12 minutes and no one's talked about a cannabis stock yet. So I kind of hear that, but I also like to BS with you guys a little bit. So let's cover a couple of things about how the podcast has evolved, and then we're going to jump into plenty of cannabis investment talk here shortly. But high level on Higher Exchanges, guys, just want to celebrate with you. I don't want this to be an ego-based exercise about how awesome we are, but more of a community celebration of, I think, something we put together that's just a weekly conversation or every 2 weeks where we all try to learn a bit from each other. We've done 100 episodes. We've had 38 different guests on Higher Exchanges. Awesome to have some of the bigger CEOs out there. Also great to have guys like Nick and Sammy and Scott and Hirsch and some of the regulators, but about 38 or 40 regulars, not regulators, about 38 to 40 guests so far on Higher Exchanges. We have 187,000 total listens. This goes all the way back to the Spaces days when sometimes we just get a few hundred people on, all the way up to today where we right now we're on YouTube, X, LinkedIn, and all the different podcast platforms. Something Morgan and I are pretty pumped on is audience is up 47% this year. So we've almost grown the size of the podcast by 50%. In what's been, not an awesome environment for cannabis investing. It's certainly getting way more excited at the margin. We'll talk about that today. But I think in terms of engagement, it's just not super high across the space. So to make the podcast 50% more popular this year is something that we're proud of. And the real reason for that is YouTube is driving the growth. YouTube is up 259% this year. We've had 31% growth on social media, and podcast is about flat. So I don't know what that says about where the world's going, but maybe the world's going more towards video. And so that's why our YouTube is up 259%. A couple more things. We have listeners from 113 countries and more than 2,600 cities. And the top 2 episodes of all time are the Schedule 3 breakdown. That was with Scott, Hirsch, and Morgan. And to put a number on that, we're at 13,285 listens. Then I think it was 4 or 5 weeks ago, we had one of our favorites. We had Boris Jordan, CEO of Curaleaf on, and Boris does numbers. Boris did 7,362 episodes. So that's the state of things, guys. Like I said, I don't want this to be a big pat on the back, ego-based celebration, but more just honestly stoked on what we built. And so, Morgan, before we get into the heart of the agenda, I just have 2 questions for you. The biggest one is, what's your biggest lesson from these 100 conversations that we've had?
Like a lot of things in business, preparation process. I feel like over the last year, we really took it a lot more serious. Not from, a lot of the behind the scenes with scheduling out time. You and I touch base, really try to put some thought into it. We have good structure. So, just learning, like when you want to do something, you got to do it. You got to do it. And I feel like we really did when we made the move to video. So I don't even know if that's been a year yet, but I think that's shown, I hope, for everybody else, but it certainly does on our side.
Yeah, no, I think that's right. We have been putting more work into it. We have regular monthly meetings about it. We try to schedule out guests more, trying to do production better. We've got the cool intro, little things like that help. To me, Morgan, like the podcast has turned into something that's just all about the relationships and the friendships that you build. Like even guys like Nick, Nick and I, talk offline. I've met Nick in person, can confirm he's a real human being. But we also have spent this is going to be the 4th hour we've spent talking here. And the same thing, I mentioned friends like, Hirsch and Scott and Sammy and guys like that, where those are people that, you initially know through the podcast, you meet them at conferences, you build a personal relationship. And, that's been super valuable. There's a cool networking hack to doing a podcast. This wasn't the intention when I got in, but you end up knowing a lot of industry leaders because they come on the show and they talk to you for an hour. Then all of a sudden, hopefully you build some sort of relationship and have some credibility there. And so, I'd say that's one aspect of it, Morgan, for me. Then the last one is, you and I have built a great, relationship and friendship through this. We've talked 100 hours or more in public here, but we probably talk, another 200 hours or more offline. So I'm also grateful for our relationship and what Higher Exchange has brought in that regard.
Yeah. We'll get to see each other in person more often, hopefully, with depending on how often you come down this way for reasons I will not divulge in a public forum. But
I don't care. My daughter's going to San Diego State. Don't be creepy. Yeah, don't be creepy. Yeah. And last thing, Morgan, then we're going to do a jump. We're going to jump right in. But yeah, where do you want to go from here? What's on your mind moving forward?
Oh, I want. Well, first, thanks to everybody for not only liking the show, subscribing on YouTube. It was great adding video for on the podcast with Apple. I thought that was pretty neat. Yeah. But I really think YouTube is kind of the holy grail for this kind of format. Seems like this is a preferred medium for the younger generation. So if we, over the next 100 episodes, we continue to educate and share what we do and like to talk about with that generation that's coming into the workforce, that's of legal age to be purchasing cannabis. I think there's so much more opportunity for us, and we stuck it through, and hopefully we just the momentum just keeps building, and love to see our YouTube channel in the thousands of subscribers. That's where we're heading. So I'm looking forward to that. How about you?
Yeah, I'm just pumped to grow with the industry. I think we put in a foundation here. We're not going to be CNBC. I don't think we're even aspiring to be the Dales Report. Like, those guys are awesome. They do daily content, shorter, harder hitting stuff. And I think we've carved out a niche where people want to sit down for 60 or 90 minutes and think through stuff every 2 weeks. I think we found a bit of our people and a bit of our audience, and I think we're having more interesting conversations. Like, I feel like for the past couple of years, we've been just frustrated, beating our head against the wall. But here we are with some federal reform. We got stocks uplisting. We've got Schedule 3 in our sights. We've got these interesting opportunities with export, interstate. We'll see how that all plays out. And so I just like coming here every couple of weeks and sitting down and trying to figure it out. And I'm looking forward to the industry getting healthier and just kind of, growing this platform within it. So I think we've got the foundation. We just need a little cooperation, on the federal and the state side, and hopefully we can just keep on building.
Yeah, we're like a hybrid of like a standard form and an acquired. If anyone listens to those acquired podcasts, which are amazing, they're like 4 hours long, but they only do one of those like one a month or one a quarter kind of thing, and so we're in the between, which is great.
Yeah. Well, you want to jump right in, Morgan, and get into the agenda?
Yeah. Now we can hear Nick's voice for a bit.
Let's go.
Yeah. So Nick, a couple of things have happened last year.
I'd say so.
But starting off, just thinking about what surprised you over last year, and why don't we start with the negative, and then we'll switch to the positive. What were some of the biggest misses that surprised you over the last year?
I mean, I think all of these answers overlap with misses and winners. I think the biggest miss has to be just, perhaps the ups and downs of this rescheduling. I think the speed at which it happened surprised me. I think it surprised everyone, particularly on the medical side, how quickly it happened. And, like everything in cannabis, you get your hopes up, you get, I think this time is different. And to some extent, it definitely is. But I have to remind myself that change takes time. And none of this occurs overnight. Even if you get something like Trulieve uplisting and the opportunity that creates, it doesn't mean we're now a normal industry treated like everyone else. So this is an incremental step, but I think realizing that this isn't we're not at the Holy Grail yet. We're just kind of on the first step there, and what that means, and that the journey ahead, while perhaps clearer than it's ever been, is still murky. And I think understanding that. It may, have hiccups along the way is just something important to remember. Something you think I would have learned after the last 5 years, but, humbled again.
So, yeah, I mean, I got roasted a lot of times for when I would say, people would say, where's the catalyst? Where's the catalyst? And everyone wanted something to be the catalyst, to be the thing that changes things. And we've had plenty of supposed of those events coming, but now things are actually starting to happen now, right? We have medical rescheduled, and we have now 2 companies in the US on listed exchanges, between Trulieve and now Glasshouse today. Congrats to them for getting that done. So kind of the idea of there was just the misses where people were getting kind of sucked in again and again to the pop and the fade over the last years, what you're talking about. Okay.
Yeah. And I think that, the idea of new money coming in overnight was just clearly not a reality. And it's still this same small community that's been here the past couple of years, and, incrementally moving in the right direction, but lots of work still to be done.
And why is that, Nick? I think that's a super important question. Something that I think I'm becoming more clear on is this. I don't feel like this is going to be a V-shaped recovery where MSOS bounces back to $10 on some sort of news, or even $20 like in the old days. It seems like it's going to take more time. Why do you think that is, Nick?
I mean, definitely a wide range of factors. I think one, as all of us know, I think people have just been burned by cannabis for multiple years now, and that just weighs on people's mindset around the industry. 2, it again, we got medical rescheduling. We did not get full, and the timeline on full. While, I'd love to see that it's the hearing that's going on right now, it does have a shortened timeline, but, what do lawsuits look like afterward? What sort of timeline does that go out to? Are we in 26, or does it go past that? And I think that overhang remains. It's not like all credit card companies are servicing us. Like insurance is still expensive. Getting loans is still expensive. So all those things that have hindered this industry forever are still mostly here. So it's not like it's nice that the New York Stock Exchange let these companies up using this kind of inventive way of, just doing the medical business, and your adult use has to be sidelined somehow. So even that is like, hey, we're still being treated different. So I think we, need to arrive at a place where this is just like any other industry for it to be accepted. And then ultimately, and we can go into the numbers a lot. I think it's kind of the headline of this podcast too, is like we need growth to return, and we need companies to be good companies. And that hasn't been the case for the past 3, 4, 5 years for a lot of names. So I think that for me, especially as like a fundamental investor, I look at growth, I look at balance sheet quality, cash flow profiles, margin directionality. I think that more than anything is problematic and continues to this day. So you're going to have that overhang even with uplisting, and so we need that to change more than anything.
So who do you think, or what would you classify as some of the biggest winners? I mean, with that backdrop.
Yeah. I mean, like, it's interesting. It's, I think one of the lessons I took is, I would say, like, don't get stuck in the mud and like get caught up in like old ways of thinking. Like, be open to changing your mind. And I think that has guided me towards some of my big winners. Like if I put out a few examples, like one, for years, I was like, I'm never going to invest in a Canadian cannabis name. That the market was, troublesome. Like you had such bad examples like Tilray and Canopy that just like were such, bad indicators for the industry, as, they got the first initial large investments from institutions outside cannabis, and they just destroyed the capital that came in, and set a really poor example to begin with. So I kind of just wrote off that market. I want to say that I changed just kind of a year ago, because I was like, hey, prices have bottomed out here and winners are emerging for the first time. So I think if you look at a name like, like I like Augsley a lot. If you look at VFF, they have been some of the best performing cannabis stocks in the industry over the past 12 months. And I think a lot of people wrote off Canada completely just because of it's a smaller market. There's, I guess, limited opportunity, but they showed like, hey, winners can emerge from a disaster area before. And I do think that'll, inform how the US looks long-term. Like we're seeing that everywhere. Prices bottom out, lots of companies fall out, and winners emerge. And then similarly, like if I, point to, I would call a very polarizing name, like Glass House, who you mentioned uplisted today, definitely one of the best performing stocks of the last 12 months. And you have to like ask yourself, hey, why? Like, what's the story here? And for a while, I didn't like the name. Like, if you look back, a couple of years ago, it was very much a show me story. Margin profile was thin. There was a lot of like, hey, we're going to do this in the future. They did that like preferred deal that had extremely high interest rates. Everything that kind of gave me concern. Then you saw the story change. Margins came up. They showed growth in a market. Again, California, somewhat similar to Canada in a way, seemed uninvestable for so many years. And they showed it. I'm sure, Jesse, you know this well, like with what you're doing at Leaf is like, hey, there's opportunity here. This is a massive market. And yes, there's been problematic operators in the past, to put it lightly. But there's opportunity to be had, and there's winners that will emerge. So I think kind of changing your mindset and not getting stuck in the mud, and say, hey, I'm going to look objectively at the numbers, and these operators are performing well for a reason, especially operators that are performing well in tough markets, in markets where prices have bottomed out for a number of years. So I think I've been using that as my guiding light for long-term winners, is like companies that can operate in bottom tier pricing.
Right. Yeah. Interesting note of Oxley. One of the companies that we have in one of our funds, Scott Samuel, CEO of C15 Systems, he was like, hey, put these guys on your radar like a year ago. He's like,
I mean, they have 30% EBITDA margins, positive cash flow, little debt. And I bet the majority of investors don't know that name very well. And they've grown, like, not a huge company, but they've grown faster than the majority of MSOs in the past couple of years.
Yeah. So it's a good point, because it's like, I was going to ask how your framework has changed, and really it's being a fundamental investor, you're just not really focused on a specific state or even country. You're just being like driven by the fundamentals of who's got improving margins, who's got the growth, more so than any kind of geographic or country specific kind of mindset. Is that?
Yeah, and I'm definitely connected it to those, like, that definitely shapes the whole story. But certainly being open to all different sorts of opportunities and who wins in their specific niche area, because it shows you can, target this industry in a number of different ways. But yeah, definitely, I'm a long-term investor generally. Like, I think there's definitely opportunities to trade like momentum movements, and that's a totally different game. But I think you invest in good companies, and hopefully, knock on wood, one day the stocks will follow. And in most cases, it happens, even if it takes longer than you expect.
Right. So 2 points on that, or because we will touch on uplisting and these companies are listing, how much does that factor into your decision making, whether if it is OTC or New York Stock Exchange, as more companies are able to access that? Is that a factor for you?
I think you can definitely use it as, I think two good names, Trulieve and Glass, have uplisted so far, and I like those names. I own them both. But I'm definitely not tied to, because I think what has been shown is that uplisting is possible. You have to do this creative structure. So, but we know it's possible now, and knock on wood, with full rescheduling perhaps coming up within the calendar year, then we know essentially any company can outlist as long as they meet the rules of the exchange. So, I think if you're out there for a quick trade, you can definitely get in names if you think they're going to uplist soon. But again, I think that's definitely secondary in my mind. I think good companies will eventually uplist. And I'm not really worried about, hey, if the company I'm invested in does it a month later than everyone else. If you're looking 2-3 years out, it doesn't matter.
So what do you think, to your point about being fundamental and looking at balance sheets, how are you underwriting like UTP? What's kind of your thesis around it?
God, I think that's one of the most important questions that is just brushed aside constantly, because these are just massive positions, liability positions on a lot of these balance sheets. And it's amazing how people just write it off, being like, hey, 280 is going away. Well, it's like, yeah, if it goes away, you're going to spend the next 3 years paying it down potentially. So I'm hopeful that, all we can do is go off of what the government has given us so far. And to my knowledge, the IRS has said one thing so far, and it's that at least for medical rescheduling, it's effective as of 2026, this calendar year, which is the date it was made effective, and that there's no forgiveness for past years. And then the only other consideration was that Blanche did formally say, hey, IRS, please go and consider forgiveness for past years. So I think that does open the box. Hey, there is a potential that it does get forgiven for past years, but it's extremely hard to put a date on it. I think the only date I can come up with is when the HHS made their initial ruling, which was what, 2024? I forgot, 23 or 24?
Yeah, 23.
Okay, 23. Which would be huge. The UTPs that a number of companies have gathered over the past 3 years is significant. So I think that's kind of the only solid date that I could think would make sense. Because if you open the door to just hey, we'll do it based on medical markets opening up. I think the California medical market opened up 20 years ago at this point. So are you going to forgive UTPs going back that far? It'd be impossible to do so. So I think that you have to look at what dates make sense. So that 23 date makes sense. And I think the one that unfortunately makes most sense is just 2026, the effective date as of the rescheduling process itself.
And that would be, to your point, right now, that's just medical.
Yeah, so, just medical. Ideally, yeah, the date, this hearing on July 15th, I think. So maybe it takes a few months out. We've heard from Boris, I think from Kim, that they're pretty confident that it goes through in Q3, Q4, which would make it effective as of 2026. So that would be great. But that does mean for most part, look at the Q4 balance sheets for these operators. Look at the UTP balances and think about, hey, like what's the current cash flow profile and how long does it take to pay down that debt? Because it'll just be a limiting factor. Like some people might just carry that debt and just treat it as relatively low interest loans for a period of time, but you eventually have to pay that back. So definitely a fact that factors into your potential growth profile. It's, fewer dollars you can put into expansion, M&A, future growth opportunities.
Jesse, should we move to the next one?
Yeah. Why don't we talk a little bit about, I think that's smart, Morgan. Yeah, Nick, if there's one thing I've said 100 times on these 100 episodes, it's that cannabis should be a state-led growth story with a series of hard-to-time political catalysts. And it feels like we're at a different spot now where some of these federal catalysts we've been waiting for, the Schedule 3s, the uplisting, some of those things are starting to happen. But a bit surprising to me, the state-led growth story has showed some pretty big cracks. I think, what was it, fall of 24? I think we all know the feeling when we saw those Dade County votes come in and was it 56, 58% or something like that. And our heart sank a little bit. And then, no PA, although maybe that's moving. We were concerned about Virginia, but now that's moving. At the same time, Nick, we had this intoxicating hemp thing come in that, depending on the state you're in, ate a portion of your lunch. And the bottom line is we're spending, a couple of years now with single-digit growth. So I feel like from an investor perspective, if you're a sophisticated investor like yourself, Nick, or you're a fund manager or another family office, you're coming and looking at the space with this complex regulatory landscape that if you unpack it enough, you could be bullish on how that's evolving. But if you just looked at the trailing quarters, you would look and you'd see not a lot of growth. So where is your mindset, I guess, Nick, on two fronts? It would be a bad podcaster by asking two questions at once, but I'm curious kind of your perspective on where we are to unlock that growth and how impactful is that when you're thinking about it, making allocations, and how much of a hamstring do you think that is to the industry right now?
Yeah, I mean, like I mentioned before, I think it's almost everything for these names to actually benefit from uplisting is hey, what multiple do we deserve as an industry? And I always go back to just traditional CPG. If you look at big alcohol, if you look at tobacco, if you look at energy drinks, if you kind of go to all the analogous industries where you could gain some insight as to where we trade, I've always landed somewhere in the 10 to 15x EBITDA range, EV to EBITDA. And if you're on the low growth side, you might be slightly on the low end of that. If you look at energy drinks, it might trade up higher because that was a hot industry for a while. But I think it's important to be realistic that this isn't big tech. We don't scale like big tech and software, and we're not going to get insane multiples. At least I think long term. This is traditional CPG at the end of the day. So I think when you take that into consideration, you have to realize then hey, how do we grow as a company? Is we have to drive results. We have to drive growth. We have to drive margin profile. And like you said, I think even saying this industry has been a low single-digit growth industry is generous. If you look at, I made a post recently. If you look at Q1 2022 to Q1 2026. So 4 years of time. If you look at some of the biggest operators, Trulieve did 318 million in 2022. They just did 287. Curaleaf 313 up to 324. Verano 202 to 208. Cresco 214 down to 151.
Wow.
I think GTI was essentially the only amongst the big five. We're going to use those as kind of bellwethers. They went from 242 up to I think this past quarter was 311. So some pretty good growth there. But that means a good portion of the biggest names had negative growth over a 4-year period. And then combine that with the fact that there was also margin degradation. In this, as excited everyone was for rescheduling, if you look at Q1 2026, I think Curaleaf, Verano, and Cresco both all posted multi-year low EBIT margins. So there's very much a price compression story that is overshadowing everything else because in that time, we've had new markets. We've had New York, we've had Ohio, we recently had Minnesota. So there are new markets coming online, but clearly price compression in mature markets is having an impact. So kind of when you highlighted hey, what do we have going forward? Virginia is exciting. That's 2027. And New York will grow, Ohio will grow. I'm excited about Texas and in Georgia. Those will be expanding medical markets. But I think it's important to recognize those are kind of tough numbers to work with. We really need a Florida, we need an adult use flip in Texas. We need large population centers to flip to really have new states kind of like leading that growth story again. So I think as important as new states turning online is, I think market share expansion, same store sales growth, consolidation, M&A are going to be equally important. And then, like you mentioned at the beginning, I think the potential for both interstate and international export could be part of the story as well. But I think for me, I'm looking at all of those because, like, clearly, I think price compression is here, it's ongoing, and it's powerful. So I think you have to use all of those opportunities at your hand to return to growth and to be attractive to new money coming in.
Is the Q1 2022, is that intentional? Was that like the peak of, or is that what those started?
Yeah, I mean,
like,
it was mostly just like, I think it's good to compare Q1 to Q1 just because, like, you know, it's like one of the weaker quarters. I don't want to compare like a Q4 to a Q1 4 years later. So that was part of it. It was just also just like the most recent number. And yeah, it coincided with, like, I would say, like the peak of the market. But it is like, I remember those days, like, yeah, like the market was frothy and cannabis was going wild, but we were also showing double-digit growth year over year for a lot of these names. It was off of smaller bases, so it's easier to grow, but that helped the story because it's like you look at these names and it's like, oh yeah, we grew 40% year over year and we have 35% EBITDA margins. And that was like part of the, you know, the hubris in 2021 and 2022. And then, you know, that's come down to earth. And now, almost similar to what I mentioned with the Canadian names, I think the companies that emerge out of just the struggles of the past couple of years are going to like show that there is opportunity in this market and winners will emerge.
Yeah, I do like channel a bit of Ben Kovler. It feels like the weird part, Nick, is that like THC products have never been more popular. Like you see it in the data, but you just see it anecdotally around your life, where like people are opening up to these things. You know, the medical side, because my family's, you know, near and dear to me, and that's like a really real thing going on in the world. Then I, you know, go and see friends. You know, Nick, I see you at a barbecue. People have a bunch of cans in the cooler, right? You know, is it NN for can?
CANN,
yeah. The beverage company, not cans of soda or cans of beer, but, you know, cans of cannabis drinks. And, you know, we see that being normalized, and I see cannabis being a bigger part of the national story. But I feel like the weird part is it's hard to shove it into the channels that matter for us. So you have these huge markets that may have no medical program in the South. You know, there's nothing we're capturing there. Then you have medical programs with limited qualifying conditions, so we're not capturing all the patients there. Then you have adult use markets like California, which are set up all screwed up, where 60% of the state doesn't have dispensaries in their city or county. So that doesn't make any sense. Then there's this other piece, Nick, which is that intoxicating hemp part, where people could choose to get stuff sent to them in the mail, and honestly, you know, all sorts of weird stuff sent to them in the mail too. So like, I'm curious, kind of like your big picture thoughts when you look at these challenges across opening new medical markets, flipping adult use, straightening out some of these programs like California to make the most of them. Then you also have that in, you know, intoxicating hemp, which, what is it? Missouri and Ohio, we're starting to see some nice pickups in those numbers as we see some crackdown there. So do you see one of those, Nick, that's a more powerful lever? And do you agree with that overall comment that it's like THC? I hate even saying THC because I don't think that's what cannabis is, but for lack of a better term, you know, there's THC products are never getting I've never been more popular, but we're having a hard time shoving them into channels that move the needles for our companies.
Yeah, no, I think you're spot on. And it goes back to what I said earlier, just about this needs to feel like a normal industry. You know, it's not like any other product I have difficulty getting, you know, no matter where I am in the country. I guess maybe if you want booze in Utah, it might be difficult. But for the most part, like, yeah. I mean, that will transform the industry, is like when you can just go anywhere and get these products, and it's just ubiquitous like any other. So I think, you know, I think the hemp aspect is definitely big. You know, I've spent some time in Texas. I'm sure you guys have too. It's amazing what the hemp stores look like down there, and just the advertising they do just as dispensaries themselves. And, you know, I think that's the story around the country. It is definitely a state by state model almost for hemp itself, given the rules that have developed for everyone, which does make it a little bit difficult to quantify in my mind. Is like, you know, how much benefit do we get from hemp if the hemp ban does go away in November? But I don't see how anyone can make the argument that it doesn't help. And it's not like 100% of people return to the licensed market when it goes away. Like, some will return to their local dealers. But no doubt a ton of people will go into licensed dispensaries. Like here in my backyard, I have 2 blocks away from where I live, there's a Chicago Cannabis Co. And they have multiple stores here. And that's the name of it. If you go to Google, it says Cannabis Store. It has 4.8 stars on 550 reviews, and it's a hemp store. And it's very nice, like, to their credit. Like, they have, they do testing apparently, like they give you like the results and all that. And I would say they're doing it much better than a lot of these like smoke shops do. But I've had so many friends come visit and buy from there because they look up Cannabis Store near me. It's convenient. It's called a Cannabis Store on Google, and it has pretty good products. So when that goes away and, they'll be forced to close, no doubt people will go to there's a legal dispensary 2 blocks away from that. You will have to, show your ID. You'll have to go through multiple security checks and all that, unlike the other store. But no doubt it'll drive traffic to these stores. And I think that's the story around the country. So I do think that going away is a driver. And like you said, with Missouri and Ohio, I think we're getting early case studies and the benefits it has given the local hemp bans those states had.
Yeah. Yeah, another part of the industry we've been talking a bit about on higher exchanges and was a popular topic in Chicago was M&A, Nick. And I feel like we're entering a period, especially if we get some clarities on these regulations. And what if we potentially get some UTP forgiveness? Like, does that have the potential, not explicitly to free up cash flows? Because I don't know if all these operators, bookmark dollar for dollar, UTPs versus savings in the bank. But at least in their head, if they, a few $100 million went away, that might, free up some capital to do some cool stuff. But I've been surprised, Nick, by the lack of M&A and acquisitions in the space. We bought a vape brand in California called Himalaya a couple of months ago, and I'm sure there's been some others since then, but that wasn't, a blockbuster deal, but it was something out there. But we haven't seen much activity from some of those bigger players. So kind of curious how you see that M&A landscape evolving. And I'm particularly curious, is something cooking maybe in that big 6, Nick? Do you see any synergies there?
God, I don't know about the big 6 movement. That would be exciting. I do think that there are scars from large scale mergers from the last couple of years that perhaps frightens companies. Like, you never know exactly what you're buying until you're operating it. And, I think there's some ugly history of M&A for a lot of these like bigger operators. I could name quite a few. Cresco Origin House, Curaleaf, Los Sueños, like there are some bad M&A over the years. So I'm and given also state limits on licenses, although that's been more flexible lately, that may limit some of the larger deals. But yeah, similar to you, I've been surprised by how long it's taken. I think there's like 2 main reasons. One is, like I mentioned, people are scarred and are just happy to run what they have and know what they're good at, know what they own. And then 2, I think surprisingly companies found, like bad companies, dying companies, found a way to survive longer than I expected. They sold off selective assets. They extended debt by just diluting companies like crazy. I think Cannabis, AYR are like good examples of that. But it can only go on so long. I think it took longer than we expected, but you did finally see, if we're going to look at M&A examples, some of it has just been buying out companies that have gone under. And that's, Verano bought some of Cannabis assets. I think what Vireo is doing, I think they're clearly like the leader in consolidation right now. You can look at like what they just did with like Fluent, which is a very struggling Florida company, who similarly like was just too small to operate on their own. You saw their cash flows dwindle even with no 280E, and sold off for quite cheap. So my guess is that M&A will pick up, but a lot of it will be distressed. And then I do think M&A will also pick up in the uplisting environment. Because I think like exit liquidity is important. And when you have M&A deals like this and you have private investors who want to exit, boy, can they move a liquid stock quickly. So I think as companies get uplisted to higher exchanges and there's more volume, more liquidity, I think there will be more willingness from private companies to want to be acquired and to want to like get an exit on the New York Stock Exchange as opposed to the OTC.
Yeah. So just one more here from Morgan, then I'll toss it back to you. But Nick, is there anyone that stands out to you as likely to be a big consolidator over the next couple of years?
I mean, for me, I think it's going to be like geography does make a big difference because you can only acquire, so much if you already have a presence in a state. But I think ultimately, the things that I look for companies to begin with, cash flow profiles, balance sheet health, and overall just like good financial metrics. Those are the companies that simply have the ability to do so. I think a lot of the big names, I think GTI, TrueLeaf, Vireo has clearly proven themselves. Like if they're going to be a good example for a company of like, I think people are surprised by how much they're doing, and some people are, cautious around how much they're doing, given like the, how many deals they're doing at once and the integration that takes. But if you look why they're able to do that is like, one, they had a pretty limited footprint to begin with. It was just Minnesota and New York and I think Maryland. So there's just easy geographies to add on. Two, it was like almost like a restructured company where new money had come in from, I think it was Chicago Atlantic. Balance sheet was clean. And given that Minnesota profile and Maryland profile, both like recent adult use markets, cash flow was healthy, margins were healthy. So I think when you have that backdrop of good financial, like a good financial foundation, you're better able to go after M&A. So I would definitely look at names that have that financial basis to be the ones to go and acquire. I also think, I mentioned cash flow specifically. I think a lot of companies, especially if you're looking for an exit, it's great if you can get to if you can get paper on like a New York Stock Exchange listed company. It's better if you can just get paid out in cash. So this market is still very limited in cash. So I think companies that can pay cash, and there's only so many that can do so, will also drive M&A.
Just one quick before I jump into the capital markets. How much is do you think there was M&A, or when you're like looking at the various factors, it wasn't necessarily an interest and willingness to acquire, but it was more of an issue where the private companies wanted valuations that were just not realistic to the market?
Yeah, I'm sure you see that too. I think that's definitely the case for a lot of these names. It's like cannabis has been just such a downtrodden industry for so long. So it's like, God, why am I going to sell out at 4 times EBITDA? And that just like, I'm sure as private operators, you're like, God, that just feels like a bad exit. But like, that's what public names are trading at. Like you can't invent a new multiple for yourself. And arguably you should be bought out at a discount to the public markets. It's like the way it would traditionally work. So I do think that limited M&A as well. That's a good point.
Yeah. I mean, we have a mantra: hit the bid. When you get, if it's a good situation, like that little bit, to walk away and wait for, especially in deflationary environment, waiting is a bad idea. So,
definitely.
But part of the challenge has been people are like, well, I don't necessarily want that public stock. And in some instances, that was very true. Then the prices went down another 30, 40, 50%, right? So it was like not really getting 4 times, you're getting, some instances like a lot less than that. So,
yeah.
So, it's just been tricky for sure. And there's still a lot of friction with that, I'd say, with the market is, it's gotten better, but there still is this, like, I don't know if it's just from years past of the next cycle will be great. Like Jesse said, like MSOS going to 20, like, and then it'll be great. And it's like, but no one knows. Right. And so if you've got a good partner that it's a reasonable price relative to the market dynamics, like just go. But we've also wanted and saw consolidation as a needed aspect of this industry for a long time. I mean, it's just a natural thing. I mean, there's certain elements that can have the ability to not have to be a part of a bigger ecosystem, but there's a lot that does, because you just need that operational leverage and, overcoming that overhead to be sustainable businesses. So, but, when we're, you sit in such a great seat because you're not just cannabis. Like this is an area you like to work in, but you are in touch with a broader investor base, right, from just the work you do outside of cannabis. And, I think a big question we get is, now we have some companies listed, is there demand there? What is it going to take to get a broader lens looking at the space of investors? Because right now, just what I'm hearing is the initial kind of new money has this mentality of, distressed, right? And they're coming in, let's go buy up distressed assets. And it hasn't really broadened beyond that to more of just generalist. So, what do you think are some of the factors that would get a larger audience to start looking at this space, and not just looking, but acting?
Yeah. I mean, I think we've touched on a number of them today in the chat. Like, I think it's going to have to come from all angles. I think the federal framework for sure is kind of the initial launching point, and uplisting is, 1A out of many steps that need to come. So, I definitely think the full rescheduling will be the next step. I think some sort of congressional legislation will need to happen just to be, we need like recognitions from someone beyond just, I think like the president and like the federal government. I think we need a coalition of states and representatives from those states to recognize like, hey, this is an industry that matters. We saw safe banking get reignited for the 7th year in a row or whatever it is. Hopefully, I'm praying this time is different. Mike Johnson said he wouldn't stand in the way, which would be an improvement. Like the House hasn't passed House has passed safe banking.
Sorry, delayed reaction.
House has passed safe banking. What was it, like 8 or 9 times, but has passed it 0 since he took over. So I think him saying that is meaningful. It means Trump is exerting his influence on them. And then going back to what I said a number of times now, I think these names need to start growing again, using all those levers, that the hemp ban, consolidation, market share growth, companies falling out, all those things need to happen. I think winners have to show themselves, and winners have to prove institutional money that they're worth investing in long term. So I think it's a whole confluence of factors that need to come together. We're starting to get those. Like, I think it is good to have perspective. Like we have bounced well off the bottom. Like, it's not nearly, I think, what people expected, but Curaleaf is up 3x from where it was at 6 months ago, 8 months ago. Like, a number of names are up 100, 200%. That is a win, and that is recognition that, like, hey, these names are probably worth more than they were at the bottom. But I think to continue that, I think the companies themselves need to show growth and margin stabilization. And then we just need the incremental movement on the legislative front. I was listening to Hirsch Jane, one of your frequent guests, he was on the Dime podcast, and he talked about, super interesting, everyone should go listen as well, about how all these movements kind of like show parallels with each other. Like, if you look back towards like gay rights or the civil rights movement, things never happened in one big step. And I think cannabis is going to look a lot like that. Like, you sometimes have a legislative event, you have a judicial event, you have recognition from various things along the way, but it never is a flip of the switch. And I think that's the case here. I think we'd love for it to be a flip of the switch, but I think it's going to take time. Like, I think, things like interstate commerce are going to take time, and it may occur in a very convoluted way. I think just this evolution of this industry, like I said at the beginning, into a normal recognized industry has to occur on so many levels, from payment vendors to insurance to loans to uplisting. Like we mentioned, so many things need to happen, and none of those are going to happen at the same time. So I think we need incremental movements on kind of all those fronts for people to get comfortable investing in this industry long term.
Yeah, it's interesting because, like, to your point, like, we have all of this patchwork regulatory things on a state by state basis, even sometimes like a municipality to municipality basis. And, now I did see, and Jesse cued my head, sound of SAFER was reintroduced yet again. I think it is the 8th time. And I did see the Mike Johnson thing. And obviously wanted it to happen back when we started Poseidon, and here we are all these years later. So yeah, I mean, if Congress could actually do something, and do something, maybe they feel better about it after these hearings go through. I know Sam, Kevin Sabet is really getting pretty loud out there with how things are going. So that means it must be going pretty well so far in these hearings. But even still, like, where's Congress this summer? Like, is this really going to happen this fall? We're going into midterms. Like, I don't really have a good read on it. I know, some folks are saying it's going to happen before the midterms. Great. Obviously, if it does, I'm not putting a polymarket bet on that unless the odds are absurd. But, I just think about this in relation to other industries, and it's just like, we have tried to and worked hard to be patient for so long, and like working with companies to just try to do as much as we can within this crazy ecosystem. And then you have other areas like AI that is just going beyond vertical. It's actually bending backwards how vertical it's going and its rate of growth. And, we're like trying to get back into positive growth, right? Just to your point as earlier, is just trying to overcome 4 years of deceleration or negative growth. I guess it's just, how, and that's like this, trying to bring the generalists in, is like, when they're looking at these other sectors that are just going bonkers and we're grinding along, I just feel, is that just the prohibition kind of overhang that is just trying to hold us back from seeing more? And I do agree with you. We're not tech. We're not going to, unless you're, in tech, but I mean, operating businesses, so what I guess is like from a generalist, maybe coming back to that, is what are kind of like longer term CPG growth rates? Like, what are kind of like some objectives that would be, then we're like getting back into the strike zone for that kind of sector?
Yeah, no, I think this is a great point. And, I think one of the benefits is we're starting from such a low basis here in terms of just recognition, in terms of how difficult the last couple of years have been. So I think modicum of improvement on all those factors will make this more investable. And I think a lot of these names can re-rate just on a, modest improvement of the investor base. It's not like I said, we don't need to be big tech to re-rate to normal CPG levels. We can be treated like that with just some level of institutional interest and just normalization of the industry. So I do think that's almost like a benefit, is that like we are starting from this just very low base in terms of, I guess, almost like quality. So I think even, low single digits growth for multiple years and margin stabilization will make a difference. And I think the parallel is kind of what I brought up at the beginning when I mentioned some of these Canadian names, because it's almost like Canada's like been a separate industry. A lot of those, and they do rhyme with the federal movements in the US because it's all connected to an extent. But a lot of those names have improved on their own simply by being good companies. And I think that's a very possible scenario for a lot of these US names. And I think when you look at some of the outperformers in the US, names that have done well, that's usually the case, is that they just have proven to be good companies. So I think there is tremendous opportunity to re-rate to even 10 to 15x type multiples. But you have to show quality financials for a number of successive years. And then just a little bit of infrastructure support with uplisting and hopefully some federal and state recognition.
And where does that tier one basket trade right now on an EV to EBITDA basis, Nick? If you're talking 10 to 15 for other sectors.
It's interesting. I mean, if you look at Curaleaf, I think they trade right around there. I think they trade 10 to 12x last time I checked. So you could almost say they've already gotten their re-rating. They've have definitely outperformed past 6-12 months. But I think the general basket is anywhere in the 4 to 6 range.
Yeah, that's what I was thinking.
So I mean, that's a pretty easy 2 to 3x, I think, would be a reasonable conclusion of where to go. But again, I think if you're showing negative year-over-year growth and margin decline, you might not even get 10x. Like, I don't think institutional investors won't come in and be like, hey, that's attractive, because it's like, how durable are those profits? It needs to be like, hey, I can invest for this in the next 5-10 years.
Yeah.
With one last one, Jesse, and I'll hand it back, is now True Leaves listed, Glass House is listed. We might be seeing some semblance of a GTI rhythm kind of foundation that should things go a certain way, they could combine as a listed company. I'm just speculating a little bit. I did see some of the chatter on X about this earlier with you and Scott, which was great. What would you think these companies will do, or do you think they will act differently than they did versus when they were on the OTC, now that then they're on the New York Stock Exchange with investor communications or reporting? Like, do you see any changes coming from them, or just kind of keep it on?
I mean, I hope so. I mean, I think the mostly the good companies have already been performing fairly well, but I think you have to button it up even further. So I do hope to see even further improvement in just IR transparency into everything that comes alongside that. Because I think there's just like greater demands from the market. But I think showing it in the financials will kind of outweigh anything else. So I see crumbs. I think other companies will follow, like TerraSend is completing their share consolidation. Verano did the same. I think it'll be interesting to see. I think some companies are clearly going to wait for the rescheduling effort, because it's like, hey, if we get this in July or August, I don't have to do this weird medical adult use deconsolidation. So I've waited 10 years. I can wait 2 months more. But clearly it's in the works for a number of companies, and it's clearly possible. I do hope to see greater transparency, greater IR communications. I think certainly like True Leave with Kim's timing on selling maybe wasn't the smartest thing to do out the gates. Granted, like I think it was going to go up and down regardless. But I think these companies do have to button up the hatches and try to appear presentable, but mostly that's done on the operational side.
Yeah. Well, this has been great, guys. Let me get ready to sign things off here by saying thank you again to FlowHub for making today's show possible. After 100 shows, we learned we need the best tech stack for our podcast. Do the same for your store, guys. Streaming live to YouTube and getting on video is what mattered to us. But if you're looking to make the most of your store, especially as we're talking so much more about M&A and opportunities ahead, the best thing you can do for your store is to go over to flowhub.com and book a demo today and see how they can improve your front-end software. So thank you, Kyle, Andy, the whole team at FlowHub for making today's show possible. Nick, good to catch up with you, man. Appreciate all the insights today. Wish we had a little bit more time, but the day job does call.
Likewise. Thanks again. Feel honored to be the guest on your 100th podcast. So congrats on that again.
Thank you, Morgan. We made it, my friend. It's been a battle. It's been a labor of love most of the time. Thank you for 100 episodes. Always good to chat.
Yeah, thank you.
And thank you guys all for listening. Again, thank you for the support. Appreciate everybody being here. It's been a journey. Looking forward to the next 100. And we'll see you guys back here in about 2 weeks. The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research nor a recommendation. You're a cannabis investor. You know this involves risk, and you know you can lose your money. We'll see you guys soon.